Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, July the 9th. The year's 2021. Let's talk trading. It's time for the weekly wrap up. As always, these videos are for educational purposes only. Your results may differ from mine. Risk management. I haven't gone over this one in a while, but somebody asked yesterday about where's the stop loss. My answer was stop loss is a function of risk divided by your position size. So you decide how much you're willing to lose on any one given trade, and you decide what your position size is. That's where your stop loss is. It doesn't matter the method. Now, if your method dictates where your stop loss is, then you divide that into the risk, and that's how you get your position size. So in other words, when the price hits the stop, it shouldn't exceed the risk dollars. It's very simple, but a lot of people miss out on it. And to continue on, brain management, no fear, no regret. And one of the things on the brain management side, I was reading something that had nothing to do with trading, but they were talking about making mistakes is a part of the learning process. And the problem with trading is that if you enter a trade and it's a losing trade, your brain equates that to a mistake. Now, sometimes maybe it was a mistake that you entered, but sometimes you can make a lot of mistakes, enter, and have a profit. So that's why you have to pay attention to your method and making sure you are executing the method as flawlessly as you possibly can. And the results will play out over time. So just because you have one, two, or three losing trades doesn't mean that you should just give up on the method. What it means is make sure you're executing, make sure that you are doing what you're supposed to do when you're supposed to do it. And part of doing what you're supposed to doing when you're supposed to do it is taking profit before the market takes it back. Now we're going to be looking at the pound in a few minutes, and you're going to see here how there is an opportunity to make about 30 pips off the launch pad. But if you didn't take those 30 pips, market took it back and then some. So let's just take a look here. We're 20 pips above the weekly open, and I mentioned earlier this week all the gaps have filled. We're 20 pips above the weekly open, 63 pips off of the high, and 94 pips off of the low. So anybody doing weekly rat trades, there was a nice opportunity. In fact, it presented itself today, it looks like. So taking a look here at the first the opening range for the week and the opening range for the month, you can see you punched through both of these on today, both of these. But once again, if you didn't take profit when you could, the market took it back. 195 pips above the yearly open, 21 above the week, 12 above the month. No inside bar since 23 days ago, 6 weeks ago, and 4 months ago. But there was other inside bar opportunities, other pairs. Now for the day, we've got a lot of pairs over 100 in range. Notice we broke out of the previous day's high. We're 32 pips above it, but 40 pips below the open. So once again, there was an opportunity to make some nice pips, not to mention crossing the double O line. You can see here, we took out the pivot in the first hour. And then just trading the buy zone, you can see here, you might have got your fingers burned, but you picked it up and then some that same hour. Maybe you got your fingers burned here, fingers burned here. Now you're ready to give up, and that last trade would have paid off. That's why you have to stick to the method. and just do it over and over and over again. Because if you give up after a loss or two, you might have gone on a win streak, but you'll never know unless you execute it. Now, as I had mentioned before, price had ran up. You know, I like to call the 40 the launch pad. You can see right here, it launched. So from 40 to 76 is 35 pips. If you didn't take those pips, the market took it back. Boom. In fact, if I'm not mistaken, it took it back in about 5 minutes. Switch over to the M5 candles here. If the computer wants to cooperate. Sometimes it just seems to want to hang up. Not sure why. But notice here, we didn't really have a rat zone trade at this level. Wasn't enough range. Range would be too small. But here on the red rats, you can see there was an opportunity to pick up 20 some pips. And right here, there's that M5 candle. Boom. And you could have picked up 20 pips off of that red rat trade. And actually, you should have picked up more because there was your highest low right there. So if you would have taken that break at the 69 level, that would have given you an additional 10, 11 pips. And so, no, this is not a hairy hindsight trade because we talk about it all the time. It's just whether or not you execute it. On the pivots, you can see we actually extended to R3 and even beyond. Monthly pivot, we're still looking for 39.53. The weekly we've already taken out. And the daily we've already taken out. Now, one thing about the weekly, you see this weekly right here, this one got taken out last week, but we revisited that level. We crossed below and crossed back above it. So that's just something to be aware of. See, once again, we were clearing those wick zones from this one, and we actually cleared the wick zone out of that lower wick zone. So, and that was on the weekly level. You can see it here on the daily. And you could even see it here on the H4 when it starts clearing out of those wicks. Now, it looks like we have to take out the pivot here on H4. In fact, I mentioned at the Walmart, there was a pivot to be taken out. In and out of the wick zones, everyday trade. In fact, a trader said, if only one method, what method would I trade? I'd say, well, it really depends on time of day, but all things being equal, if you pin me down, I would trade the wick zone. Because the thing about the wick zone is not only do you get to trade the wick zone, but you're also trading because of where the wick zone is. You're going to have a close open right about the same area. So you'll be trading that daily open. You can cross that line. You'll be trading the break possibly of the previous day's high or low. And price just doesn't like staying in the wick zone, just like it doesn't like staying in the rat zone. It's just the wick zone has a percentage usually in the 70s, whereas the wick zone, it's more in the 60s to 70s. So the wick zone has a slightly higher statistical edge, only slightly though. It's just with the wick zone, the other thing is it also gives you the opportunity to sometimes trade the rat zone. So if price comes down in this wick zone, as you can see here, and starts to go the other way, you're in the rat zone for today and inside of yesterday's wick zone. In fact, there's one trader out on Facebook who liked when I combined the charts and showed that, and I think that's what they're trading now. So looking at the range, the month so far, this is the seventh trading day of the month, or actually six, because I think Monday was a holiday, but FOREX trades around the world, so it still was a trading day. But we still haven't gotten out of the 0 percentile, so we've got some pips to move. Question is, which way we're going to move. We didn't break out of the previous high, but we did break out of the previous month's low by 55 pips. High minus close 60 and close minus low 107. So the rat traders were paid off. And if we look at the weekly, for the week, we're only at the 9 percentile. So unless something changes, we're going to have an inside bar. We didn't break out of the high or the low, hence inside bar. High minus close 60, close minus low 97. So once again, the opportunities were there. Today, 121 pips, 78 percentile. High minus close at the moment, 38. Close minus low, 83. Rat traders paid off. High minus open, 94. Open minus low, 27. So buy zone traders were paid off. And that's what you want to look for, is where you can get paid off day after day after day. But the hard thing is part of the brain management. You could call it the self-talk. If you try one of these methods or anybody else's method or make up your own and you have a loss, then you want to start messing with the method, when you have to just realize that part of trading is losing. It's just that simple. It's really hard to overcome, and you're talking to somebody that really hates to lose. I mean, as a kid, I really hated to lose. I hated to lose when as a teenager playing sports, just super competitive, hate to lose. And it's something I struggle with in trading and sometimes still struggle with it. But, you know, going over the things that I talk to you guys about on a daily basis, over and over, it starts to create different pathways in my brain. So losses don't mean the same thing. It's just, you know what? That's just, what happens. You put the trade on, it goes against you, you stop out. It happens. Does it happen every time you trade? If it does, then you got to check your method. But I know with my methods, it doesn't. So you just have to take them on the chin, get back up, and get back in the game. So, fellow traders, that's pretty much the weekly wrap up. Hope you had a profitable day and week. Hope you learned something new, something that you can use as you trade. And weekend's coming up, so I hope you have a fun and safe weekend. Be careful out there. And when you come back to your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So we go out there and drain the banks. And one other thing, if you're on Reddit, go ahead and join the Never Lose Again subreddit, because right now I'm the only member. I know a few people have been watching the videos over there, but I think it might help me out if I have a couple more people joining that subreddit. So this is the Rumpled One, over and out.